Rodrigo, thank you so much for joining us. What's behind the big fall?
Well, Sam, this morning we have a big announcement coming from the Fed, the central bank in the US, and they were essentially a bit hawkish. The market was expecting a rate cut, which was delivered, 25 basis points. But the important bit was the forward guidance for next year. Prior to the announcement, the bank had said that it wanted to cut 4 times next year. Now it's saying that they're only going to cut, or likely are only going to cut twice. And they've also lifted their outlook for the inflation. And that's important because it raises the prospect that maybe the Fed can go or cannot cut next year. So we've seen a big reaction in the US dollar, which has weighed significantly on the Aussie dollar.
Yeah, we just saw on the screen there how badly the Aussie dollar is performing across the board. A terrible time for an overseas holiday, isn't it?
Yes, not good news if you want to buy foreign currencies. And for the Aussie, it's interesting, as you know, that it was weaker pretty much across the board. And that's a reflection of the Aussie dollar sensitivity to risk aversion. We've seen equity markets react quite significantly, whilst at the same time, the Aussie dollar is also a very liquid currency. So to express that concern, the Aussie dollar tends to be a currency of choice, and hence why it's underperformed across the board.
Yeah, the US Fed did cut rates, as you say, as anticipated as well, but US markets didn't take it all too well.
No, we saw a very big reaction as well in equity markets. Essentially what happens is that you lift your expectations of interest rates, and equity markets get priced, if you like, from a risk level, from a cash rate, risk-free rate, and that risk-free rate is all of a sudden being lifted. So risk-sensitive sectors such as real estate, consumer discretionary were the ones that led the decline, and it basically forces a bit of a reassessment in terms of the outlook for equity markets.
And we saw that that's also bleeding into our Australian share market this morning and heading into the afternoon session. But our Reserve Bank is going to meet in early next year. How is this going to impact the RBA's rates decisions, and when can we get a cut?
Well, for the RBA, the most important thing is the inflation outlook here in Australia. And it still hasn't got the confidence yet to think that rate cuts could come unless we see a decline in inflation. So for now, NAB's view is that the RBA will be confident enough to start cutting rates by May next year. But the inflation number that is coming at the end of January will be super important in that regard.
What's the outlook then for next year? I mean, earlier we saw forecasts tipping for above 70 US cents. Now, the reality is going in the exact opposite direction.
Yes, unfortunately for the Aussie dollar, very near term, there's a lot of uncertainty, and the Aussie dollar doesn't do well in that uncertainty. In particular, President Trump's inauguration on January 20th will be important because he may well set the scene in terms of what to expect, particularly in terms of tariffs. And that will be super important, not only because of the risk aversion that it creates, but also the reaction function that may well come from China. And again, for Australia, the Aussie dollar, how well China does or doesn't do will be important as well.
Rodrigo Catrillo, thank you so much for your insights.
Pleasure.